All right, let's turn to credit, and the government has proposed changes to the credit laws and responsible lending. So what does that mean? And could it impact the 10,000 new places on the first home loan deposit scheme, which have been announced? Well, to tell us his views is Anthony Landahl from Equilibria Finance. Anthony, good to see you.
Nice to be here.
Let's start with what was announced just as far as those the 10,000 extra places on that loan scheme. Obviously positive news.
Yeah, it is positive news. The federal government first home loan deposit scheme essentially has been very well received by first home buyers. What it at base does is it enables first home buyers with a deposit of up to of as little as 5% to get into the market by guaranteeing their facility. So most providers had run out of places. The provision of 10,000 more places is a good positive sign, and it's letting young home buyers into the market, and it's also getting young home buyers into the market at a time when investor activity has dropped a lot. So we're seeing a very good take up, and I think it's really good timing and a good sign.
And certainly a relaxation in Victoria, which is good news. And I mean, that's obviously deliberate to get things moving in Victoria.
Yeah, I mean, good news. I mean, I think from a small business perspective, from an economic perspective, everyone's wanting the borders to open up. Everyone's wanting some relaxation around some of these policies that are in place, particularly small businesses that are resilient, that have probably copped the brunt of a lot of the things that have come in response to COVID. So yeah, good news on that front.
So tell us what's happened, because obviously in the wake of the Banking Royal Commission, it was credit rules were tightened.
Sure.
That certainly affected investors, but also for everyday customers, I guess, and that may be borne out now with some people have overcommitted, which we might see as those banking holidays are unwound. But where are you seeing it at the moment as far as the flow of credit is concerned in Australia?
Yeah, the flow of credit has become more restrictive, and the government recently announced some proposed easing of those restrictions. The responsible lending obligations were born out of the National Consumer Credit Protection Act of 2009, and what it's created is is a system where essentially providers have to verify individual information, and it's become very much a one-size-fits-all approach to access to credit. They're not taking into account a borrower's personal situation. They're not taking into account their credit history. So the government recently announced changes to the responsible lending obligations, which is a great sign. It'll help the flow of credit. It'll help the timeliness and speed of credit assessments. And what it essentially does is it removes the obligation of lender verification of every document received. Lenders now have 100 pages essentially of verification they need to undertake to borrower responsibility. So we should see that open up the flow of credit to consumers. I should make this point, it's not moving the responsibility away from responsible lending. What it's doing is it's moving the obligation to borrowers. But since 2009, we've also seen the government's brought in other areas that have protected consumer credit access. So it'll help the flow of credit, and that's really needed for both consumers and small business. They're looking at coming in March 2021, which will time in with JobMaker, which will time in with the relaxation of further job seekers. So it's a good sign, and I think it's really well supported by the private.
Yeah, as you say, obviously that's great news as far as those protections are concerned for someone that's looking to take out a loan. What about those people that are already committed, that as I say, may be overextended?
Yep.
And particularly as we head into early next year, where we're seeing a lot of that assistance disappear.
Yep.
Are you seeing a particular risk there? I mean, it's been called a cliff. It may be a large slope.
I think there's definitely a risk, and I think we can see that risk with the banks provisioning for essentially loans that won't get repaid. So what we saw was originally 6-month deferrals. We've come to the end of that deferral period. Providers are now extending that by another 4 months. And essentially they've changed a little bit of the criteria, but if you're still struggling to make those repayments, it's been extended by 4 months. The concern is what happens after that time. To your point on risk, I think the best way, in one sense, we can look at that is each of the banks is provisioning a large portion. They're withholding distributions of dividends around this, whether it's a cliff or whether it's this managing the risk of that time when we see JobKeeper come off, we see some of these loan deferrals come off, and as much as people may be overcommitting, it's actually their circumstances is such that they can't now make those repayments. And there's a lot of provision in place by the providers for exactly people in that situation who can't pay their loans.
Yeah, okay, that's consumers. Are you comfortable as far as small businesses are concerned?
Yeah, small business, the positives for small business, I guess, is that the government's very focused, and it's come out in the budget, the government's been very focused on trying to get some stimulus packages for small business. Small business have reached out and accessed a lot of those small business loans. Small business in Australia is very resilient. Small businesses have adapted, have adjusted. Small business has shown over time that it is able to navigate muddy waters, albeit this is unprecedented times. I think the key time is going to be how quickly we open up the economy for small businesses again and get back to business, because business will bounce back. The longer these go on, the more difficult it's going to be for businesses to start meeting some of those obligations, particularly for those who took out the short-term loans for 3 years, where that may now be amortised over 2.5 or 2 years, and they've got repayments where they may have drawn $100,000 or $200,000 that they may struggle to make. So that's a risk. The quicker we get the economy going, open up the economy, some of those initiatives reflected in the budget, as well as obviously you mentioned Victoria and some of the other restrictions slowly lifting, that's going to help small business get back on its feet, which is going to enable them to reinvest and make those loan repayments as well.
Anthony, great to get your view this afternoon from Equilibria Finance. Thanks for joining us.
No worries. Thank you.